Okay, so hello everyone. Welcome to the latest Future of Money event. It's great to see so many of you here. It's good for all of you in France. I hope you're having a good rentrée. For everyone else in the rest of the world, you'll have no idea what that is. And it's a crazy French idea that no one else really needs to bother about. But other than that, thank you to François de Chezelles for joining us today for blockchain, tokenization, and the future of real estate. So Francois is CEO of Talium and Talium Assets, and he's an expert and a leader in terms of tokenization and what that could mean for the future of real estate. So Francois, would you like to start by telling us a little bit about yourself?
Sure. Thank you, George, and thank you very much, Future of Money, for having me here. So I'm really glad to have this discussion with all of you. So yeah, we'll talk about a number of things. And if you have questions at the end, I'll be more than happy to answer that. So about me, so I'm François de Chezelles. I'm indeed a co-founder and CEO of a company named Talium. We are an IT integrator that exists since 2012. We specialize in particular in building blockchain projects, and we're also the editor of a tokenization platform named Talium Assets. So this platform targets both the issuers when they want to raise funds and handle the asset management afterwards. And also we target essentially actually intermediaries, financial intermediaries who can have their white label platform to white label investment platform with digital assets to raise funds and create then investment marketplaces with digital assets. Okay, so my background, I have a background in engineering, even if I'm more on the management side. I graduated from MIT a long time ago. Then I quickly moved to the IT industry, and I have more than 20 years of experience in this sector. Especially around management and strategy, and with especially a keen interest in innovative projects, hence the blockchain and tokenization. Innovative projects are using state-of-the-art technologies. So yes, and basically I'm pretty passionate about solving real-world issues.
Brilliant. Okay, so before we get going really with the main part of this event, can you just summarize what changes you envisage in real estate over the next few years, just to kind of give an outline of where we are and where we might be going?
What we are in the real estate business right now?
Yeah, so what you envisage the changes are going to be over the next few years?
Actually, real estate is it's a gigantic market and it's full of opportunities, but today, and this is especially true where there's the higher returns to be obtained, especially true with the commercial real estate. It mostly benefits a few, namely in particular accredited and qualified investors, and especially because real estate is notoriously illiquid. Now we are changing that. And that is thanks to tokenization. Now everyone will be able to benefit from better real estate investment opportunities. And these will be easier to access, cheaper, more profitable. And the best of all is these investments will be less risky.
Okay, great. So obviously we're going to go on to talk about tokenization. Now, for some people, that might be a word that they've heard of, know a little bit about. For some people, it could be something completely new. So could you give us a basic overview of what tokenization is and how it works?
Certainly. So tokenization is the process of representing digitally something, typically an asset, can be the right to something, and representing it digitally as something which is called a token, and that is the most important part, it is transferable. So you may think of course, first, you all know about Bitcoin, which is something which can be transferred and has some value, but you may also think of very different assets, like, for example, a share of company, or whatever financial instruments, securities. And when they are represented as tokens, you would actually call that a security token. You may represent real estate, indeed, as tokens to make them transferable. You may represent art, and that's things that we hear these days about NFTs. Most of you have heard of these. You could represent carbon credits, for example, with tokens to transfer them and handle them on a secondary market. You could also have access. You could tokenize the right to access an application. Then we would call that a utility token. So tokens are not something new. They have existed for some time. What is new is that the fact that the blockchain has arrived, and what it changes is that pretty much I won't get in all the, I won't explain to you what blockchain is. Most of you know, or there are lots of tutorials on the internet. But what is really interesting to understand is that blockchain is there. The core function of blockchain is to get rid as much as possible of intermediaries, of third parties. And the intermediaries, they imply cost, they imply delays, latency, and using blockchain, you may skip through that and then gain on costs, gain on delays. So with tokens, why have tokens that represent, for example, a share of a company on a blockchain? Is because the blockchain provides, it solves the need for no double spending. I mean, it is very important. For example, if I have a Bitcoin, if I send it to somebody else, I no longer have that money. I sent it to somebody else. I cannot send it to one person and send it to one other person at the same time. Same with a share of a company. If I have it, no two people can have it at the same time. I cannot trade it with two people at the same time, etc. This blockchain is the technology that enables to avoid double spending. Then it is possible to digitize a number of assets so that we can play with them and automate a number of processes. That's where people with blockchain, they talk about the internet of value, because now we share value over the internet, while before it was the internet of information, where the internet was used to spread information, share information with others. But now we can share and really transfer value. So also these tokens bring some other very interesting features. They and useful. They are programmable with what we call smart contracts. These are unfalsifiable programs that are automatic. For example, you could say that I can only transfer, if a share of a company can only be sent to someone of this or that country and cannot be sent to someone of some specific country, I can check it and I can make sure that it is impossible to falsify. Okay, so that's one thing. It's immutable, so everything about transparency also. So every time you need something where it needs to be transparent, auditable, blockchain is and tokens are gonna have a lot of things. And one last very interesting and useful feature, especially for what we're talking about today, is the fact that tokens are fractionable. So actually, you do not need blockchain to be fractioned, but a token can be fractioned, and it simplifies all these processes. So when you have a token that represents something, it's very easy to fractionalize it and split who owns these rights.
Okay, so I guess from what you're saying there, that's why it really matters, because a lot of people obviously partake in all these activities already. People buy and sell art, they buy and sell companies, they buy and sell property, and a lot of people would say, "Well, I've never had a problem." So is it really this point of the double spend and the ability to split it up into smaller fractions more easily that is the key to you for why tokenization matters to investors?
Absolutely.
Okay. So is it something that's being widely used already? Is it going on without people being aware of it? Or is this completely new?
Tokenizing in general, well, what is especially not new and what is now growing, and we see it on a daily basis on our end, is the fact that indeed tokenization is more and more present in the investment world. Mm-hmm. Why? Because it's really a game changer. Typically, when you have all the investment world, capital markets, they are pretty much the putting in front of each other. On the one side, you have investment opportunities. On the other, you have buyers. Well, pretty much the issuers of some investment opportunities, typically they have different ways of raising money. They can typically, for example, a company, they can either dilute themselves, and we're talking about equity shares, or they can raise debt. Okay, and on their end, they pretty much what they need and what they want is they want to find investors. Okay, it's very simple, but that's it. On their end, the investors, what they want is of course, access to better investment opportunities. They want to mitigate the risk. Of course, they want to control the risk of their investment. And that's it. They want to find the right investment opportunities and lower their risk. Well, to streamline that, there exist solutions, and there have been solutions before tokenization. There is the listed products on one hand. Okay, listed products that works. That's not for every investment product. That's very expensive. That's time consuming, and it's not necessarily for every investor too. Mm-hmm. On the other hand, and what's the bigger chunk of the market is non-listed investment products. And for the non-listed investment products, typically to access them, either you go through an intermediary, financial intermediary, like a private bank, a broker, asset manager, etc. And of course, this has a cost. Or you go through. Let's take specifically the example of crowdfunding platforms. Crowdfunding platforms are something which is excellent. It works. It's great. It digitizes the entire issuance process. Wonderful. So we're already talking about digitization, hence automation, about a number of processes and saving on costs, etc. They provide a marketplace for the at least for the issuance, and they get into some sort of fractional ownership. Okay, but what is really missing there is something extremely they miss post-trade functionalities like distribution of dividends, coupons, etc. But the most important thing, and what I would say, and I believe the investors are the most interested in, is they want to reduce their risks and of investment. And to mitigate these risks, they typically need liquidity. So they need a secondary market, and you don't have that with crowdfunding platforms. It's very difficult through intermediaries. Take fund shares, for example. When you have a big fund, typically you would have some large investors who are in it because there was a high entry ticket. And from then, if ever I'm an investor and I want to find somebody who would, I want to resell these shares, fund shares, to somebody else, well, it's extremely complicated. You need to go through legal counsels. It costs a lot of money. It takes time, etc. And basically, for one single transaction, is going to cost a 5-digit budget of legal costs. It's insane. That means that no big investor would do that frequently, and no smaller investor would get in simply because the risk is too big, or they stay in and they consider that there will be no secondary market. So generally speaking, liquidity, having the possibility to much more easily finding buyers. If I want to sell, I can much more easily find someone who may buy. This is the grail for non-listed investments. And that's where tokenization comes in. That's where it's really the great innovation that solves these major pain points because of the core feature of tokenization, which is transferability. So the core feature of tokenization that is of reuse and that really changes the game is not what we sometimes hear about. We hear about digitization. Yes, fine, digitization is awesome, but you can do digitization with a crowdfunding platform, at least for a number of things, not for the post-trade. But actually the fractionalization also, it's a great feature, but really what is major is the transferability. Okay, so how do we use tokenization how tokenization indeed improves, I would say, enhances the investment world? Well, first, it enables to tokenize an asset, financial asset, and fractionalize it. Then it becomes easier for small investors to get a piece of it. We can digitize, okay, like I said, okay, and we can consider that the existing processes before digitization can get augmented, and we can simplify the payment flows like dividends, coupons, etc. But the most important part, and that's where the big game changer is we're talking about the investment world. The investment world is highly regulated. So we need compliance. And for every transaction, especially on the secondary market, every compliance of every transaction. I cannot sell to whoever. They need the KYC amount to have been done properly. It needs to be compliant with the local jurisdiction, could be several jurisdiction. And not only that, you also actually, for some financial instruments, you may have more complex rule to check and to be compliant with. You may, for example, need to compliance with a shareholders agreement. And a shareholders agreement is something that means which is secret. So you need to check this secretly, not for everyone. You need, for example, you may have rules where you need a vote of the executive board before some secondary market trade is done, etc. Yeah. Okay. The great thing with tokenization, and if the tokenization platform is proper and can handle all these compliance checks, and of course, I'm happy to say that ours can do that, well, then it is awesome, because then you can truly automate all the checks that needed before some, for example, some lawyers, and you save on costs. It's much more fluid. Every time you want to sell, you can say, okay, I'm looking for a buyer. And if you find one, the trade can be done automatically. Okay, so this sounds awesome. Now, the very big question, of course, is, are we allowed to do that? And the great question is, are we allowed, legally speaking? In short, yes, and that's awesome. The core feature of blockchain doing that, there's no double spending with tokens, has done that more and more regulations, more and more regulators, financial market regulators, accept and recognize the digital representation of a security on a blockchain. They say, okay, it's the same value as if it were on paper. Why? Because I know that there cannot be, there's no double. So, okay, I'm allowed to digitize that, and that's awesome. So we're talking about ledgers, okay, securities ledgers, and what is legal is indeed to keep the ledger of all the assets on a blockchain and to keep track of all the transactions. Okay. But something very important, and I'll end with that, something to have in mind and to keep in mind is very important, because a number of people I talk to think that, okay, if we're talking about tokens, we're talking about cryptocurrencies, we're talking about, no, forget it. When we're talking about tokenizing a financial instrument, we're talking, it's the same legal construct as a traditional security. So it's the same product. It's just been digitized. Why has it been digitized? Because blockchain allows it, enables it. That's it.
That's great.
That's great.
Thanks, George. I'll go on, and I'll just have to draw some attention on Talium Assets behind you, François. It's about lowering the cost, and that's what we're going to talk about here on the real estate subject, because we're here for that. Obviously, there are all sorts of existing investment alternatives here. Why is there a huge need for innovation as focus on the real estate sector?
Yes, because indeed, like I said, there are a number of real estate investment alternatives that exist. So there's the real estate funds, you have crowdfunding solutions, etc. Still, first thing to bear in mind is the fact that the real estate market is tremendous. The global real estate assets represent $280 trillion. That's 60% of all global asset classes. That's meaning that, of course, there's room to do a number of things, plus it's a gigantic business. Second, some very interesting number to have in mind also is, was given by an MIT report some time ago, that, well, the higher returning classes of real estate assets are the commercial real estate assets. And know that 93% of them are beyond the reach of retail investors. It's incredible, meaning that should we be able to make them accessible by retail investors, then there are many more interesting investment opportunities for retail investors. Okay, so pretty much the problems of owning high quality real estate today are indeed the first, like I said, there's the high barrier to entry. Yeah. Because and especially quality properties, they require large upfront payments, so exit a number of investors. Second, the real estate as it is today, typically investments involve a concentration of the risk, because first, because of the large upfront payments. If I'm a retail investor, I don't necessarily have that much money to put into investments. If I have large upfront payments in investment projects, then the diversification of my investments is close to impossible. And the diversification, of course, is the key to one of the keys to controlling the risk of my investment. Of course, because if I invest in something and finally the return is absolutely not what I expected at the beginning, then I'm stuck. Okay, risk also, also the real estate is, like I said previously, it's a notoriously illiquid asset class. So of course, that brings more risk because, for example, if I'm an investor in some product and if at some point I need the money, either because I have a problem in my life or because I want the money to invest into something else, well, it becomes difficult. And trust me, probably many of you have experienced that. I have that experience. I have that experience of having a personal investment in some real estate, and I want to get out. I've been wanting to get out for years, and there's just no liquidity. And I'm stuck. Okay, it brings money, but I want to use that money for something else, and pretty much I can't. Okay, and other problems that the real estate, current real estate market encounters is that there are slow going through intermediaries. There are slow transactions, and also slow settlement processes. Typically, that involves, by the way, a number of intermediaries like agents, sellers, buyers, financiers, insurers, etc. This involves redundant verification processes, and and there is a redundant information registered in different databases and registries. All this is costly. All this is time consuming, and definitely, so these are pain points. Also, yes, I would say that it's more detail, but sometimes I would say that financial intermediaries, they have a better interest in having you invest in riskier products. Well, possibly you would want a broader range of and being able to select more the projects you invested in. Also, currently there are a number of financial instruments for the real estate market that exist. Like, for example, in the US, there is the REITs, the Real Estate Investment Trusts. Okay, fine, they work, but they have their drawbacks on the dividends, on the tax you pay, on the volatility you are subject to. Of course, when you have these structures, there is an overhead to run these structures, etc. Finally, also, I would say that some other issue with the current real estate functioning is also, if you want to broaden the access to diverse investors, for example, foreigners, for foreigners, it may be extremely difficult for them to navigate through the rules for compliance, etc. Well, and that's where typically, if we could automate a number of things, well, definitely. So definitely, it would ease the access. Some other one focus on one specific thing, which I love. I really find it great, but it's limited. It's crowdfunding. Like I said, it's really awesome because it works, and we talked about it. We said that actually it's great, but it's insufficient because it's not tackling the most important benefit, which is liquidity. So pretty much to sum this all up, what would be great with the current real estate market is, wouldn't it be great if it could be easier access, cheaper, with possibly better returns because there are less costs. So you may consider having better returns, more liquid, hence less risky, more flexible, because I talked about some products like real estate investment trusts. Now, possibly it would be great if you had more flexibility with the type of instruments that you were to create that would be custom. Well, and that's where tokenization can bring something.
Okay, yeah. Well, can you, like, very kind of briefly, can you specify exactly how tokenization solves the issues and benefits all of us?
Briefly, I'll do my best. Okay. Okay, something, first, typically in the real estate market, normally the most common structure for real estate deals are SPVs, so special purpose vehicles. Okay, so these are companies, typically, so people invest in a company. They don't invest in the real estate itself. Also, something interesting to know, by the way, to have in mind is that actually, should you have a company that owns an asset, for example, that owns some real estate asset, then if you sell shares of that asset and you trade them, you don't need a notary for every transaction, because you're talking trading shares of a company. You're not talking trading the real estate part itself. So that is convenient. And well, that's great, because that's actually what is done with tokenization for real estate. We cannot, there's no legal recognition, at least in most countries, of tokenizing the parts of real estate assets itself. People, what they do is they create a company, for example, an SPV, could be some other company, and they tokenize this. And is great, because this is totally legally recognized. You cannot do this with any structure of company, but there are a number of structures where you can do that. So more and more regulators accept, recognize, like I said, this. So you have this in France, in Switzerland, Luxembourg. It's getting all over the place, and for one very good reason, because we are not changing processes. We're doing just the same, just simpler, and with more possibilities. So yeah. The benefits that tokenization can bring to this market are first, indeed, the fractionalization. Okay, so to handle the problem with the high barrier to entry due to larger upfront capital, which is required. So this can democratize the access to small investors. Also, like I said, you enables to possibly customize the investment products, because tokenization enables the exposure to individual assets. Then it's easier to manipulate, to customize portfolios. Yeah. Also, and extremely important, if not the most important, is the liquidity part. Like we said, so with first, the fractionalization, which increases the pool of potential investors. Then the secondary market and the possibility to trade peer-to-peer without intervention of a third party. And by the way, understand that liquid assets, they somewhat command a premium, and hence they can increase the asset value. Also, with the tokenization, we can bring benefits of automation, because the smart contracts can automate steps such as the compliance and paying the, like I said, the dividends, etc., which can be hard-coded. Globally speaking, cost efficiency, sell time, I won't get into that. Okay, but now, generally speaking, okay, so this lowers the risk for investors due to greater information transparency, high expected liquidity, improved portfolio management. Now, let's get into very specific, and because this is important, I believe, very specific use cases among many others, but very specific. Okay, first, let's talk about the simpler one, which we talked a little bit already, the crowdfunding, and could also be some scenario with a nude ownership. So typically, when you would have, when you would want to tokenize to tokenize a real estate, you would create either a company that owns this real estate asset and you tokenize it, or you put this asset into a fund, real estate fund, and you tokenize this fund. So in both situations, it's the token represent ownership of a share. Okay, so then if you sell tokens of such tokens, the owners of these tokens can, the asset can be put for rent, and the owners of the assets receive each month, or actually with a tokenization, you could even do that. They receive every single day their share of the benefits of the profits. Fine. Okay, so it's like doing crowdfunding, because many different people, plus it's transferable, so you have the secondary market, and it's fractionable. Okay, so you have a more liquid market, and yeah, that's it. Second, and you can automate also all the processes with a payment of dividends, etc. Okay, wonderful. And there are some structures, and some well-known structures, including in the US, who do that. They have this fund where every time this fund purchases a new home or apartment, and people purchase the tokens of that fund. And why is it interesting? First, for a number of things that we discussed, but also because since we've been able to digitize processes as much as possible, then, and to cut on the third parties, then it's more cost efficient. Then actually for investors, what they're interested in, there's a better yield, and that's what it's about. So on this side, tokenization can enable better yield. Second scenario, very interesting, which is new, which doesn't really exist so far. We are totally into it, and we actually are working very actively with a partner on that, and should be ready this September. It's working on revenue sharing, say, for the sharing of the future income. So now the token doesn't represent a share of a company; it represents a right to future income. It's like royalties. By the way, we're talking about royalty tokens. So now the owner of the token owns not a part of the asset, but a part of the income it generates. He can get regular income, just like before, but he doesn't own the assets. Then he may have this token for more attractive entry price. Plus he has the secondary market. Something else, another scenario is, and it gets a little trickier, is when someone wants to buy an asset, okay, wants to buy a home, for example, and say he doesn't have the money at the beginning to purchase it, or he's looking for more cost-efficient way of getting the money instead of okay. So one way of doing it is to not take a loan, but have a financial intermediary purchase the asset, and you have a contract with them, and this financial intermediary purchases the asset, tokenizes it, and then the buyer, the one who wants to purchase the home, pays rent and purchases tokens at the rate he wants, and in due time he gets all the tokens and he owns it completely. See, the interest in that is that it can enable lower rent. He gets to pay lower rent month after month, and at the end he becomes full owner. And okay, so since there's no need to apply for a loan to do that, there's reduced administrative costs. There are no penalties for early repayment, because this is typically an issue. Okay, and there's no commitment other than the lease. That actually he can even, and that becomes interesting, he can even at some point, or right from the beginning, but could have at some point decide that somebody else is going to rent this home. So that becomes a passive income. okay, so uses token to create passive income from the rent, and actually also he's free to he can resell the shares on the secondary market. So there's really huge flexibility. Yeah. Next possibility is actually to it's a different scenario where, for example, it's someone who owns an asset already, and he wants to leverage owning this asset to be able to and transform this asset into a collateral to be able to get a loan. And okay. That's where we step in in DeFi. So possibly a number of you know about DeFi. Is short for decentralized finance, that has popped up essentially since last year. And it makes it possible, DeFi makes it possible to use tokens that you may have as collateral to quickly obtain a loan made in cryptocurrencies. So that becomes very interesting for because an owner of tokenized real estate could commit tokens to DeFi. So it's like a mortgage loan, but with lower costs and interest rates. It's faster and much easier to access. And something extremely interesting is that it can be partial. It can be, you could tokenize just part of his asset, or simply tokenize it and simply put just a few tokens, and so he controls his risk. Okay, and the same idea, actually, the idea of using tokens to leverage that and to use tokens as collateral for other financial purposes, this is something very general. And all the tokens we've talked about so far, all the diverse scenarios, all the tokens, they could be used as collateral. So what's great to keep in mind is I've talked about a number of things that we can do today. Mm-hmm. With DeFi, it's more something of tomorrow because it's so new, but it opens the doors to many different possibilities where you have assets, you tokenize them, you use them as collateral to get money, and this loan, you'll be able to reinvest it in something else, etc. So it opens a number of doors.
That's really interesting. Thank you very much. Never really thought that hearing and talking about real estate could be that interesting, and innovation is on the way already. So before we move onto the Q&A, can you give us the main lessons that we can take from this discussion?
Yes. Well, the main lesson is that all that I've talked about is possible today. It's the title of this discussion is talking about the future, but it's future because you've not done it yet. But it's possible, and it has started in 2021. So as soon as now, you're capable of accessing the same investment opportunities that you may have encountered before, but now it's just easier. You have more opportunities, it's cheaper. You can find products which are more profitable, and best of all, and the most important to all of you, these investments are going to be less risky. And also something else to bear in mind is that, the products, there will be new products, like I said just before. And finally, yes, the one thing to bear in mind is that the entire real estate market is going to be tokenized for a very good reason. It's because it's not new ways of doing things, different ways of doing things. We're doing the same things, it's just much easier, faster, cheaper, and less risky.
Great.
Thank you very much.
No, thank you, Francois. That's really, really interesting. And I think you've covered an awful lot there. And there is so much more than perhaps, when people think real estate tokenization, okay, breaks it down smaller, but there's so many things in there that can revolutionize how people invest, but also what it means to kind of own property or be involved in the market, which, as you say, is so inaccessible or for so many people, or has been up to this point. So I think that's super, super interesting. Now the chat has been very active throughout your discussion, and there's been a lot of discussion going on in there already, but I've started pulling out a few of the questions that have come up so that for the benefit of anyone that's not been reading the chat or anyone watching on YouTube, perhaps we could go over some of the questions that have already been spoken about. So one of the first ones that came in was, legally speaking, is it the real estate that is tokenized or an investment vehicle owning the real estate that is tokenized? Which you covered, but if you just summarize that.
Sorry, I didn't get that question very well.
Is it the real estate that is tokenized, or is it an investment vehicle owning the real estate?
Yeah. Sorry if I wasn't clear. I thought I was, but rephrase that. Indeed, it is not the real estate which is tokenized. It is not, because this doesn't have legal recognition. Actually, I'm not 100% sure, but I think it would be recognized in Switzerland, but I need to check that. Still, if you were to tokenize the real estate asset itself, should it be legal? Should it be recognized as representing the asset? You would encounter an issue. You would encounter the issue of the secondary market. One purpose is to make things liquid. You need to simplify the secondary market. And if for every single transaction you need to involve some notary, that's going to be a pain. Okay. So basically what we do is, indeed, we create for every asset that wants to be tokenized. Well, actually, it's not the asset, it's a company that owns it or a fund that owns it. But it's a company which is tokenized, and this is legally recognized.
All right. Okay. Can I just take the second question from Katie, because it speaks to me as an African? And there's no cliche here. Can it reduce corruption, the tokenization system?
Corruption. Considering that when you talk about using the blockchain technology, there's full traceability and transparency. First, that's one thing. Indeed, let's say in some countries, especially with real estate, there may be sometimes actually not even just corruption, but even some issues whether, who owns that asset, that real estate asset? Well, when it's on the blockchain, it's immutable and it's transparent, so you cannot modify it, so it can be used as a source of truth. Now, with corruption, I'm not sure what the question would be. Just so you know, let me re-say something. It is the same asset, a security token, real estate that has been represented by a token is the same asset as if it were part without a blockchain, a part of the company that owns the asset. So the same rules apply, and there is no more corruption. Better, actually, since there is traceability, there are chances that actually you have many more ways of making sure that there's no corruption, that everything is legal.
Okay, that's great. So Franklin asked, what kind of real estate assets will you tokenize to begin with? So is it buying a house, or is it just for investment purposes?
Should I the question, sorry. What do we okay, the first scenario that we have tokenized is actually a fund, but that was an existing fund. Okay, right. An existing fund for real estate assets. And okay, so that's it. Now there are we have another customer with actually it's assets themselves, but it's people who look at the asset as that was the first use case that I gave, when people actually buy together. It's like crowdfunding. They purchase together an asset to be able to gain rent, shares of the rent. But actually, we believe, and we are going to put that in place. That's what I said. I believe that there's a scenario that may be of possibly more interest to many, it is that you don't need to own pieces of the asset. Say I'm someone who really has just very little money to invest. I want to start investing in something. To me, but that's a personal belief, I don't think that it makes much sense to tell that person, to convince him to buy by saying, okay, you're going to own 0.0001% of that asset. It means nothing. It doesn't own it. It can go there, etc. But if you were actually to reduce the entry cost by saying, okay, you don't need to own that very tiny piece of the asset because it doesn't mean anything. But what you're interested in is a share on the revenue. Yeah, so we haven't done it yet, but I'm confident that it's going to be something huge. Yes.
All right. So I have another question that says, what real estate market segment do you prioritize in France, for example?
Yes, if you see me laugh, is because I would say the French market is not the fastest to move on to tokenization, and I believe that's due to a number of reasons. Well, typically, I would say that tokenization has suffered from the fact that a number of actors talk about tokens, but nobody cares about tokens. Investors don't care about tokens. Issuers don't care about tokens. But what investors are interested in is they want a better yield. They want less risk, etc. They want more money. And that's all they're interested in. The fact that it's token, that it's blockchain, is just the technical means of achieving these goals, but that's it. Okay, so I believe that there's been a problem, and that's why things are starting and have really picked up steam in 2021, but not before, because there was a problem of arguments. Okay, now let's get back to, actually in France today, we do not have real estate projects. We have other projects, but it doesn't matter, I would say, to all these listening and watching, because again, tokenizing real estate is not tokenizing real estate, it's tokenizing a company. Actually, where you're interested in the low entry amount, the dividends or coupons, and the secondary market. That's what you're interested in. And actually, the fact that it's real estate is just it's almost a detail in terms of the investment product here. So in France, what we intend to do in the real estate area is, with our partner who specializes in this revenue sharing scenario, we intend to indeed develop real estate scenarios with revenue sharing. But that's not done today. Yes.
Okay. So if anyone else has got questions, please feel free to keep posting them in the chat. And in the meantime, another question is, which public blockchain is, in your opinion, the best fit to tokenize securities at the moment? What are the blockchains that are compatible with Talium Assets tech stack, for example?
Okay, if you don't mind, George, I'll get to the question just to add something to the previous question, because possibly that was part of the question. Just so you know, apart from real estate, actually, we have with our platform, we have great flexibility on the type of asset that we tokenize. So actually, we have projects with equity, we have projects with bonds. We actually even have utility tokens, and we have very diverse, because we pretty much realize that apart from some specific projects, every project and every financial instrument is somewhat different. You may have classes and subclasses of assets. For example, let's take shares, equity. You may have normal shares, preferred shares, and they have different rules for the transfers. They may have shareholders agreement that apply to something or else, etc. Same with bonds. You may have bonds that are you need partial fungibility of the assets that are issued, because, for example, you may have a bond which is fungible among all the bonds that have been issued in January, but they are the same asset, but they are not fungible with those of February, etc. So we handle all of that, actually, and we realized that actually that's one strength of Talium Assets, among other strengths, but that's one of the important ones where we are capable of just forget about it. We are not pushing a financial instrument. Just let's understand you need financial structuring experts to conceive the best financial instruments that you need, and then we'll be able to tokenize it. And that's great. Okay, so now going back to your question, yes, something very important to understand is that we are, even though blockchains are mature, okay, they are mature blockchains. Okay, so we can put projects in production, we can add value, etc. Great. Still, we are still at the very beginning of the blockchain journey. So the blockchains that exist today are not the blockchains that will exist tomorrow. So there will be other blockchains with more scalability, lower costs, possibly offering properties to handle the confidentiality of transactions between investors, etc. Okay, so we believe, at least at Talium, we believe it is extremely important to not be compliant with one blockchain, not tokenize assets on one blockchain, but say, okay, today, let's tokenize on this. And then if tomorrow you want to change, to move to another blockchain, you'll be able to. And that we enable that. That's great because today, for example, say, because Ethereum, everybody's talking about Ethereum, of course. Ethereum, there's a lot of gas fees, transaction fees on the secondary market. It's not interesting on that part. It possibly will be someday when there's Ethereum 2.0, but we're not there yet. Now there are other blockchains like of Polygon. Our trades on the secondary market, they cost peanuts. We actually offer them to the customer because it's nothing. It's really, we don't care. But it could be many other blockchains. So as of today, we're compatible with, I counted actually the other day, it was more than 40 blockchains. And we'll be compatible with many more. So that's the idea. To not, the customer can choose it could be permission blockchain if he wants to pay zero, absolutely zero. But now with blockchains like Polygon, you don't care. Go public, use Polygon, cost nothing, and that's it.
Interesting, because I think you're on the same wavelength as Joachim Lebrun, because he was asking which blockchains Talium Assets was using. So he said, I have a preference for Polygon personally, so it looks like it's...
Yeah, we're compatible with any blockchain with each, which is, and that's for that's technical, but those that are compatible with the Ethereum virtual machine. Yeah.
All right.
Okay.
So looks like we have finished the questions. Everybody's quite happy with the feedback. Everybody's thanking you, as we are actually. So thanks for your time, François. It's really interesting and what a great way to finish the week, understanding some of the things that tokenization, it's not blockchain only, it's not Bitcoin, it's not scary, it's just something that it's happening and will get better and better with time. So I'll let George finish the outro here.
Yeah, no, thank you. Thank you, Alex. Thank you to everyone that's joined us. Thank you, Francois. It's been really interesting. And it's great to see so many people engaging with something that is going to define the future. And as you say, is already defining things now. It's not just the future, it's because we've not done it, that it's why it's the future.
George, can I just interrupt you for a second? Because there is a last question from Katie. What is the ratio of investor, private individuals to companies? This is for François.
Ratio of private investors to companies. With our experience, well,
I guess with your company,
yeah, that's an interesting question because so far it happens that most projects so far are always with a private network of investors. That doesn't mean, and that's possibly one part of the question, but or not, doesn't mean that it's only accredited investors, qualified investors. Not at all.
Okay.
Let me give you an example. For example, we have a partner / customer in Africa. It's called EIC Corporation, and they are totally partnered with a private bank called iCapital Venture, and they do all their financial projects, investment projects are tokenized using our platform. And what is great is that they capitalize the fact that the EIC Corporation, which is an association present in 50 countries, so they have many people on board, and they have onboarded and they enable everybody of the EIC Corporation to get onboarded. And so it doesn't mean that you need to be an accredited investor. It just means that there wasn't public advertisement about these operations, etc. But it will occur in the future. But it totally depends on the customer. It doesn't change a thing for us.
There you go. Back to you, George.
No. Again, it's really interesting. So if anyone does have any other questions, feel free to send them through. You can send them by email or through our social channels, and we can get them to Francois and get back to you with an answer. And of course, this event will be available for you all to keep watching forever on YouTube. So if you need to go over anything again or want to find out more, then go and have a look on our YouTube channel. If you do come across our social pages, like them, share them, send them around. We want to get as many people involved in this as we can. And so far, it's great to see how many people are engaging. So if people have events that they'd like to see in the future, let us know, and we'll try and put something together for you. But in the meantime, we have our next event lined up for you already with Winston Ma, who will be talking about China and how they're shaping the future in AI, blockchain, and digital currency. So that will be taking place on the 30th of September at 4 p.m. UK time, 5 p.m. France. So join us for that one. And until then, thank you very much.